Hello, traders. This is Rick Sadler, owner of Hit and Run Candlesticks, and I would like to take the next 15 to 20 minutes and share with you how I take the pulse of the market with 5 of my favorite market pulse charts. Even though we are short-term swing traders, it's also important to know what the bigger picture's up to, something I like to call market attitude or chart attitude. In addition to getting the pulse of the market, we as traders will also develop the skill to recognize trend direction and reversals, because determining the overall market trend is extremely important. It means the difference between trading for a profit or at a loss. If we could only know the future of our health, well, guess what? We can if we have regular checkups and physicals. And the market's no different. With the market, we just get to be the doctor. So how does a trader get the pulse of the market? It's pretty easy, really, by taking a look at a few leading charts. And today, I'm going to share with you 5 of my favorite plus 1. After 27 years of studying the markets and just plain trading experience, I plan to share and teach you so you can take the pulse of the market and take that next step to trading success. So what is a good market foundation or a bad market foundation? Knowing the underlying market, in other words, if you're a swing trader, short-term swing trader, but knowing what the longer-term market is up to can be very, very beneficial. Let's think of it this way. If you have a very nice house, like this one over here on the right, and we'll think of this as our bullish market, the foundation can be weakening underneath you without you even knowing it. The foundation can give you the heads up to the strength or weakness of your house. By getting the pulse of the market, traders develop the skill to recognize trend direction and reversals. So it's very important to know what that foundation is doing. A crumbling market foundation can be disastrous on your account. You may be fighting trading in an uptrend or trying to trade in an uptrend, but the market might be leaning toward the downside. Knowing whether the foundation is solid or cracking can be worth thousands of dollars. Wouldn't you take steps to protect your house if you knew your foundation was damaged? So wouldn't you take steps in your trading if you knew that the market was not making higher highs or higher lows in the bigger picture? And if you knew your foundation was in tip-top shape, you'd just keep right on trading bullishly. I hope in the first few minutes so far, I've gotten everybody to think about the underlying market of your trading. I hope I've gotten you to think a little bit about the foundation and how important it is. Now, we don't want our account to look like this house looks, do we? Well, the house started to collapse because of the foundation, and many times our trading account gets in trouble because of the market foundation, because we're not following what that foundation is doing. So what I'd like to do here is show you my 5 favorite stocks that I look at not on a daily basis, but every couple of days, certainly once a week. One of my favorite Saturday morning things to do with a hot cup of coffee is to take a peek at COPX, Copper, FedEx, United Rentals, URI, and the financial ETF, XLF, the SPY, and IWM is my plus 1, so there's 5 plus 1, actually gives us 6. Now in this video, I'm sharing with you my 5 favorite foundation stocks. You may have a stock or two that you think might be better, and I would love to hear about it. I might even add it to one of my 5 favorites. You can always get in touch with me at rick@ricksadler.com, And I'd love to hear about your foundation stock, and also maybe hear why you like to follow that to help you with finding out the final foundation or the direction of the longer term market. So sure would like to hear about that. Okay, this next little section here is pretty boring stuff. It really is. I'm not going to read through this. You all have it in your ebook, so I'm going to just kind of go over it very quickly and just hit a few of the high spots. Copper is the Copper Miners ETF, and in your ebook are the three top holdings. The most familiar, you may be most familiar with Southern Copper, SCCO. That is one of the top three of the copper ETF, COPX. So why do I like copper? What's copper used for? Well, just about everything, to tell you the truth. Power generations, televisions, computers, mobile phones, electricity, electric circuitry, and microprocessors, trains, cars, fixtures, doorknobs, sinks, bathtubs, counters, heating cylinders, and that's just to name a few. Copper is in everything. Copper is a leading indicator, in my opinion, of how much growth is going on in our world. A rising copper market often means industries are also rising along with the overall stock market. Okay, let's take a look at these two charts, COPX versus the S&P 500. You can see over here, well, let's start with the bottom chart. You can see over here that starting, it looks like about February, March of 2015, right here, the S&P 500 started to put a topping pattern in. Just a nice little square box. It couldn't break to the top, couldn't break to the downside, and we call that a topping formation. Well, notice over here, copper, what do we have here? July, August of 2014, copper started failing right in here, and you can see the downtrend where it started to move down. Very important to follow that trend. And as much as we had, or as much as we would like to have thought that this was a reversal, it just simply rolled over and started heading back down. Definitely a trade here. I mean, a short-term swing trader, this is something we're looking for. But the underlying trend is what we're looking for to give us a clue what the foundation of the overall market might be looking like. Again, you can find this in your ebook, so I'm not going to read through the whole thing. But a little bit about FedEx. I will hit the high spots. FedEx is a top holding of the IY Transportation ETF. Very simple. When consumers are buying and spending money, FedEx is up. When FedEx is down, consumers are not spending. And when consumers aren't spending, business sales are down. Not good for a bullish market. So if consumers aren't spending money, FedEx is not either flying as much or their cargo holds aren't as full. And if we see them start to weaken up, that might be a clue that businesses aren't making money. Therefore, the future revenues or earnings report might not be the best. Something important to remember is that when FedEx is rising, consumers are spending, and business is up. Good for the market. FedEx is also a very good instrument if you want to follow a retail stocks, and then the retail ETF might be RTH. Okay, let's take a look at a couple of charts. FedEx versus RTH, the retail ETF. So FedEx reached a peak in June 2015. That's right here. And in December 2014, over here is when it started creating a top. And then about a month later, you can see where RTH started to, or actually RTH formed a top up here and headed down. So we got a little bit of a clue with FedEx when it reached that top, and it started moving down a little bit, again, about a month before RTH did. So this is one of the reasons why I think FedEx is a great chart to look at for the overall market condition, because, again, if consumers aren't spending, then businesses aren't making money. If consumers aren't spending, businesses are not shipping product to customers. United Rentals, or URI, is the largest equipment rental provider. They rent equipment and tools to businesses that build businesses. So, if URI is down, then there's no business expansion. And of course, if URI is up, businesses are expanding. Good for the market. XLF is the most popular financial sector ETF, bar none. The financial sector makes up almost 17% of the S&P 500 and is the second largest group of the companies represented in the S&P 500. Follow the money is something I always say, and that's one of the reasons I use the SPY. My favorite chart to watch while swing trading every day is the SPY, followed by IWM. IWM oftentimes will confirm the strength in the SPY and forewarn changes in the SPY trend before they happen. Okay, let's take a look at the SPY chart here with just moving averages and no candlesticks. Real quick, let's cover the moving averages that I have up here. The T line, this is the black line right there. That's the T line. That's the 8 exponential moving average. The 34 EMA, that's the orange line right in here. The 50-day simple moving average is blue, the darker blue. It's the dotted line right here. And the 200 SMA forward is the light blue. And the 200 SMA measured on the highs is the red line, the dotted red line. All right, as we take a look at this chart, notice right in here we have consolidation, which is looking a little bit suspicious. We have a high, we have a lower high, and then we have a high over here that really it did break up or break out above this high, but not for very long, and it quickly dipped down. Now we did pop up over here, but immediately started failing. There was absolutely no confirmation. And you can see here where the T line and the 34 started moving down below the 50 and both my 200s up there. Now, this is FedEx, and FedEx started to break down early July 2015. Here in a little bit, we'll look at the SPY chart, and the SPY chart actually started to break down late August. So you can see that we received a little bit of a warning ahead of the SPY breaking down. Let's take a look at the Global X Copper Miners ETF. COPX is a stock symbol. And let's take a look at this chart here. Starting way back here, you can see where it's just made a highs, and then we've got lower highs, and then right in here we made a low, a higher high, or a high, then a higher low, then we went to a higher high. But as we hit up here this red dotted line, which is my 200 SMA measured on the highs, you can see it just rolled over and failed right in there. So we start counting from this level up here. We have a high, a lower high, and let's go ahead and put a line here on this low, lower low, and just go right down into these lows here. Now this is a pretty current chart. This is March 2016 right here, mid-March. So you can see how price has moved up, But what we've not done yet is made a, let's just roll this over. We've not made a high with a low that has come back to make a higher high. We haven't done that yet. So we're still in a relief rally until we see the rollover or the profit taking to start creating this chart pattern. So we would have a low, high, higher low. So right now, I'm looking at copper still being in a downtrend with one heck of a good relief rally going on right now that could actually turn in to a trend change again mid-March 2016. Oh, by the way, this my chart here is August 2014, and you can see how copper's been in a downtrend. Copper's been in a free fall since 2011. Take a look at your charts. Go back to 2011, take a look at copper, and you'll see exactly what I mean. This is the chart for URI, United Rentals, Inc. Now remember, these are the folks that rent to businesses that create business. And if you take a look at this, URI started losing momentum in late 2014, where we have a high, a low, and we ended up with a double top, which actually what we also have is a bearish M pattern right here that just started down, and then we popped up a little bit, but you can just see how it's in a bigger downtrend. In fact, if you look at URI, and that's just in a great big downtrend with a high, a lower high, a lower high. Let's put a line up there. So let's just go from these highs, high, high. So if we're going to chop this one off a little bit, and if we wanted to, we could actually do it this way just as well. And you can see that until we make a chart pattern where we have a low, high, higher low, the downtrend is still in effect. We just have not created that pattern. And right now we're in a relief rally. Once again, notice the date. This right here is March 2016. Also notice the lower lows. A low, lower low, lower low, and then we even get to a lower low down here. So you can see how URI is not renting equipment to businesses that create businesses, that create expansion. So URI is still hinting to us that business is down. Now we're looking at one of the spiders, the financial ETF XLF. And you can see that it finally gave up in late August, which is about the time the SPY finally gave up and rolled to the downside. You can see it's been trending up. After this high and the pullback, the trend, the bullish trend, just didn't have a lot of get up and go to it. It seems lethargic. And then from there, it just totally caved in. And you can see here where we've made a high. We've made a high, a lower high, and we've made a low and a lower low. Notice here, we have not made a chart pattern yet that would give us that low, high. Well, I guess if we want to go low to a high, you can see a higher high or higher low right there. And then from here, we've gone up and a very tiny higher low, which gives us a higher high. And from there, we're still climbing. But I think what we need to see is something a little bit bigger, a little bit more of a pullback so we can actually physically see it. And then maybe we can see the rally up to take on these highs. So there we would have a high, higher low, higher high, something to work with that would really start to put pressure on this downtrend that's making lower lows and lower highs. Notice on IWM how it's creating a head and shoulders right here. Let's come up here and put this being the left shoulder, and let's run right over to the right shoulder, and here you have the head up here. And then you can see how price started to move down. These are the moving averages moving down, crossing down through both the 200 period moving averages, and this is where we start making the highs, and then we make a low, a higher high, and it failed, making a lower low, which actually now what we've done is we've created an inverse head and shoulders, which is bullish, and you can see how it rallied up, but it ran out of steam and then really caved in. And the reason they run out of steam is because it's in a downtrend, and once it gets in a downtrend, it's got to create a chart pattern with enough momentum to lift it up, and it just wasn't enough momentum here in this inverse head and shoulders to push us to the upside. So now that we've fallen down, we need to rally up, create a nice base, a good base in here that could start lifting us up. And to do that, we need to see a series of higher lows and higher highs. As we look at the chart, notice the head and shoulders formed in July 2015. You'll notice that this warned us almost a month ahead of time what the SPY might be doing. The next chart we'll look at, and we'll take a look at that. Here I have the SPY chart. The SPY replicates the S&P 500. Now let's start at the bottom of our box right here with XLF. XLF gave up in late August 2015, which is approximately about the same time that the SPY started caving in right here. Now URI started losing momentum in late November 2014 and shortly after started plummeting to the downside. Copper, COPX, has been in a free fall from late August 2011, but it was about, if you go back and look at the charts, if you go back and look around May, June of 2015, between May and June 2015, copper ran up and hit the 200 period moving average and started to roll to the downside. That was in May of 2015, well before the August 2015 drop in the SPY. FedEx started breaking down early July 2015, a month ahead of time of the SPY. IWM formed a head and shoulders in July 2015, a month ahead of the SPY breaking down, and gave up in mid-August. Real quick, I'd like to go through what these moving averages are again. The T-line, that's the black line, it's the 8 EMA. The orange line is the 34 EMA. The blue line is the 50 simple moving average. The light blue line is the 200 simple weight forward, and the red line is the 200 simple measured on the highs. Determining the overall trend of the market is extremely important. It means the difference between trading for a profit or at a loss. In addition to getting the pulse on the market, traders need to develop the skill to recognize trend direction and reversal. Well, I hope in this short video that I've given you a little insight, maybe a couple aha moments. I've tried to share everything I could in a short amount of time. I gave you a list of my 5 favorite charts that I use to see or to get the pulse of the market, plus one, the IWM. I want to say thank you very much for spending your time with me in this short video. I do appreciate it, and I would really like to see you in the trading room. Take care. Have a great evening, everyone. Good night.